This is Jim Emter, Van Ahn & Company, Alexandria, Minnesota, with the closing grain and livestock comments for August 17th, 2015. Corn market: September corn down 3/4 cent, December down 1, 374 1/2. September soybeans up 1 3/4, November down 1/2, 917 on the close. September meal up 0.20 at 325.40. September Chicago wheat down 6, $5.50 cent. September Minneapolis wheat down 5 1/2. December down 5 1/4, 528 1/2. September Kansas City wheat down 7 1/2, 482 1/4. Very quiet day. We had weaker markets overnight, firmer markets this morning. A lot of news floating around. We had the FSA data dump this morning forecasting over 2 million acres of prevent plant in corn and soybeans. The market kind of shrugged that off after rallying a little bit, saying, well, USDA's probably already got this priced into the USDA report that we've gotten from them, and that's why the market kind of backed off from those talks. Also, we've got good rains around, forecasted amounts of 1 to 3 inches through a lot of the upper Midwest, central U.S., and even the eastern areas here as we work through the next 5 to 7 days. If we can get this precipitation, it's very likely that we bring the bean crop home. It's just a matter of quantifying how big the crop is. We feel USDA may be a little strong in their yield estimates at this point, but that doesn't mean that we're going to get any adjustments anytime too soon either. So we look for the market to bottom out over the next 30 to 45 days. Price targets down around that 350 area for the D's corn to 363. Nove beans looking at about an 880 type low developing, and then we look for firmer markets as we work into October, November, December, possibly even into that January, February time frame of just kind of a progression of uptrend once we bottom out here. What we view as the next 30 to 45 days, but no assurance of that by any means. As we look to other parameters, September 11th is our next USDA crop report. You know, a lot of people are going to be watching yield out of that report as well as harvested acres, especially after this FSA data dump. But the other main feature going on right now is the Pro Farm Crop Tour. We'll update that daily as we work ahead here in regards to any updates that we've got. Right now they're working through parts of Indiana as well as through Nebraska here, and we'll see as they work to the central U.S. to see what kind of yield estimates we've got. As we look to the feeder cattle market, feeder cattle down 62 1/2, 206.80. In the October live cattle up 82 1/2, 147.67 1/2. And the October hogs up 122 1/2, 66.55 on the close. Looking at the cattle market, kind of a subdued trade. Dress trade to our 237 to 240 here last week was kind of really frames up the area that we were within. As we look to the hog market, you know, kind of a steady, little firmer tone here right now to the market, but we should have good numbers around. So we really don't see us getting much above that 67, 68 mark in the October hogs. We need to see demand after these hogs and cattle markets. We're going to cool down a little bit nationwide now. We're going to need to keep to see grilling demand strong here, not only domestically, but around the world. And with our strong U.S. dollar and China backing off on their currencies levels, again, the cattle and hog markets are going to need to be monitored closely to make sure we continue on an even keel here. We do have reasonable numbers around, as we indicated in hogs. Cattle still a little tight, but the overall long-range trend of these markets still could be lower despite some recovery here in the near term. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results.